Hi folks, Scott here, and this is the wrap for Thursday, July 25th. So let's talk about what tomorrow may bring us. Today we had a little bit more weakness, putting in a new low, but we did manage to close above the 10-day moving average. And yesterday, it's hard to tell on this chart, but the cash index for the S&P 500 also closed above the 10-day moving average. But intraday, we had weakness, as you probably realize. So I thought it would be interesting and helpful to share the results of fading gaps after two successive closes above the 10-day moving average, this yellow line, and following an intraday dip or a daily dip below the 10-day moving average. Sometimes they call it a intraday straddle. Let me get to, and I'm also going to add the 200-day moving average as a filter using Gap Trader, my back testing tool. Whoops. Oh, and one other thing I want to show you. I'm going to go show you large gaps. And only because I accidentally showed large gaps just now in the trading room, and the numbers are so terrible or so weak, I thought it was worth pointing out. So let me show you this. So a large gap I define as simply 40% of the 5-day average true range. You can Google ATR, average true range, and look at that. It's just the daily range averaged over 5 days. That's high to low, inclusive of gaps, meaning you go back to the prior day's close to account for that overnight move if the gap did not fill on a given day. And you see we've had 50 gaps greater than 40% of the 5-day average true range in the past 11 years after an intraday dip below the 10-day moving average. And the subsequent gap, if large, has been pretty bad. This is using an end-of-the-day stop. That's what makes these remarkably poor, because normally, I don't know what it is for all large gaps, but it's better than this on average. 11 of 23 with a 0.5 profit factor for down gaps, 12 of 27, 0.5 profit factor for up gaps. Maybe a slight bias for gapping up, but these are weak numbers. Now, started with that. Compare that with what if we get a smaller mid-size gap? Smaller mid-size gap in either direction. What do you think the numbers are going to show? I'm using my tool here, Gap Trader, to change the minimum gap size to 0 and maximum gap size of 1, because that's as big as gap as we'll trade here. Generally, 1 times the 5-day average true range. All of our gap guides exclude anything beyond that. What do you think these numbers will show? Will they also be poor, or will they be neutral, or will they be above average? Oh, you know what? I forgot to exclude the large gaps. Sorry about that. I'm going to rerun this in a moment. This will be all gaps between 1 point in the ES up to 1 times the 5-day ATR. Using the end-of-the-day stop. And those are just pretty much dead average break-even numbers overall. I mean, it's 136 trades. Yeah, you lost a little bit of money, a little bit weak. So neutral win rates, slightly weak profitability. But that's all influenced, as you might guess now, by the large gaps. Let's look at just the small and mid-sized gaps, up to 40% of the 5-day average true range. Pretty remarkable. That is clearly above average historically for end-of-day stops, fading gaps. That's a good number. Normally a small to mid-sized gap is more like 75%. So really it's the longs that really influence this number. So small mid-sized gap, okay. Big gap, not good. Market is right at a key moving average, and it's more likely to run some stops and gain momentum in that direction if the gap is large. So keep that in mind going into tomorrow. All right, let's talk about today quickly. I don't want to have another long rambling video like I did last night, but you know, I'm not. My only agenda here is to accurately reflect the day and share any thoughts I have. So I do try to keep them manageable, but let me keep going. So today, it's when I start rambling like that screws up my timing. The worksheet for today, we had sizable gaps to the downside. right around the prior lows, with the exception of the Nasdaq. Nasdaq actually gapped up today, which It's definitely doing its own things. It's been weaker of late until this morning it gapped up. Everything else had pretty sizable gaps to the downside, which weren't terrible, but not great either. We had some risk for fading down gaps after bearish outside days, only 50-50 under similar scenarios historically. But that was countered by a widespread day following a widespread 7 day. That means the widest range of the past 7 has been good. So my pre-market comments show the following. Per last night's tip, a couple other unique patterns. After closing below a prior 20-day high and above the 200-day moving average, good numbers. 8 of 13 hit extended targets. Also confirming, I failed to show that, but look at these extended target ratios for down gaps. 86% that opened below the prior lows had been profitable historically. And actually, we may have been just above it. Yeah, we were between the close and the low, barely. But these are good numbers. And let's see. This was a concern. Down gaps that opened below the 10-day moving average after closing above it and above the 200-day moving average. Only a 37% win rate. That's all gaps. Even the small and mid-sized gaps have been terrible in the scenario historically, and if they're large, really bad. 27% chance of winners. On a sample size that's admittedly small, but still, that's skewed enough to concern me. And today, with the gap guides only being slightly attractive, mixed data with this staring me in the face on a down gap, and mixed opening directions. The Nasdaq was opening up, and large closing variance, almost a 3-point difference between the 4 and 415 closing price. This just wasn't worth it for me unless we opened less than 40% of the 5-day ATR, inside of the prior lows, and less than the 4 p.m. close. So I would not have mixed opening direction. So a lot of caveats there. Small window of opportunity. Was going to trade with the half size position, hold some fixed in target. As it turned out, we didn't open there. We opened down a couple points. You can see the ES open. Actually, you can't see it, but it's on the pink line. The high of the day was the high of 15-minute range was the open, which was 1677.75. Took a little bit of heat, reversed, triggered the 15-minute high breakout, which showed good numbers, pretty good numbers today. Plus, it looked like it was going for gap fill, so I traded it. On the 15-minute high breakout, I got a late entry on it, and technically, I guess you'd say I chased, but it had enough data supporting the gap. I was willing to concede and just get in. So I got in actually about 2 points late, which is extraordinary, frankly. But the thinking was getting in at 1679.75 or 1680, wherever it was, with a 4-point stop, still allowed my stop to be around the lows, right, around 1675. That was below the lows of the day. So I was comfortable with that, and I was going to go for full gap fill anyhow. So that was the thinking. That was still going to get my 4 points. As it turned out, because it's a weak zone, often this DL zone will reverse about a point in front of gap fill. I say often, I don't know the numbers off the top of my head, but I've seen it too many times historically. So I decided to not get too greedy, take off half at +2 and tighten my stop to -1. As it turned out, it rolled over and I lost 1. So I ended up with a tiny net win on that. That was disappointing because some folks did report catching a full winner on the 15-minute high breakout. The low breakout numbers came out. They were pretty good. I didn't want to miss it again like I did yesterday. Plus, it was actually earlier. It wasn't quite the lunch time frame. And I thought we may go down and fill this gap at 1671.25. And it wasn't quite lunch, so I went ahead and left the trade on. Because remember yesterday, I missed the winner because I took the trade off during the lunchtime, or decided to only trade it after lunchtime, and missed a nice winner. Of course, today I put it on, and what happens? Buffaloed, caught the low of the day, right at 1675 even. The actual low day was 1674.75. I wasn't the exact low, only missed it by a stinking tick. For reversals, time me out for -4. High breakout triggered. That was another good setup. It's a busy day. And as luck would have it, long at 82.50. High of the day was 86.50 on that bar there. Did not get filled. Held it through the cash close. Could have gotten out with about +2.5 if I remember correctly. Decided to hold it because we were near the highs, and often it'll pay to see if you can catch a winner, and did not. It got me for plus, I think, 1.25 points, 1.5 points, something like that, right at the end of the day. because I tightened my stop to lock in a profit. So pretty disappointing day, frankly, on each of those trades. Just didn't quite turn out. And technically missed a winning gap filled to boot because I passed on the gap. So that happens. You just got to move on, and tomorrow's another day. So that was my day, and that is the wrap for Thursday, July 25th. Have a good one.